the first half of 2026, market conditions remained volatile. Our customers, as well as RHI Magnesita, remain affected by geopolitical uncertainties such as wars, trade policy, and foreign exchange rate volatility. Market conditions are on a positive trajectory in steel, but our industrial business is even more challenging, resulting in the weakness of the industrial projects business. We observe that customers, particularly in glass and industrial applications, continue to delay investment decisions and thus place less orders. Despite this environment, RHI Magnesita is delivering a strong improvement in earnings compared with the first half of last year, with our adjusted EBITA increasing to 165 million euros against 141 million euros during the same period in the previous year. On constant currency, this is an improvement of 42% year-over-year. This performance demonstrates the increasing resilience of our business. The self-help initiatives we launched during 2024 are delivering tangible results. Our business in the steel segment has continued to strengthen across key markets, and our operational discipline has enabled us to improve profitability. While industrial projects have not recovered despite our modest anticipation, we remain very confident in their long-term fundamentals and expect a stronger contribution during the second half of this year and in the next years. Creating a workplace where every colleague and even every business partner returns home safely every day is the foundation of everything we do. The first half of 2026 was an important period in our safety culture transformation. Our safety management system went live in the first quarter and now covers an increasing number of sites, including customer sites, where our workforce is present. More than 110,000 safety observations were submitted during the first 6 months of the year. This reflects the culture we want to build, one where people actively identify risks, openly report them, and prevent incidents before they happen. We prioritize the quick processing of all reports to address weaknesses, mitigate hazards, and keep employees safe worldwide. Our safety culture transformation continues to strengthen leadership, accountability, and proactive risk management across the organization. Our ambition remains unchanged: zero harm, no injury.
The first half of 2026 shows the strength and resilience of our operating model. Revenue was down 4.9% to 1.6 billion, but on a constant currency basis, it remained broadly flat as our pricing and self-help actions offset the decline in high-margin industrial projects. Adjusted EBITA increased by 17% to 165 million, and our adjusted EBITA margin improved to 10.3% from 8.4%. This reflects the continued delivery of the group's pricing and cost self-help measures, in line with our expectations for 2026. We saw a 24 million foreign exchange headwind, mainly from the weaker US dollar and Indian rupee against the euro. Despite that, adjusted earnings per share increased 32% to €1.81 per share, underlying the stronger profitability of the group. This leads us to our operational highlights.
Our steel business continues to demonstrate encouraging momentum and is the main contributor to improvements in the first half of 2026. North America continued to perform strongly, while both Europe and India delivered the turnaround we had worked for in the past 2 years. Pricing initiatives, but much more operational improvements and cost discipline contributed to stronger earnings. Industrial projects remained softer than expected. This was caused by customers delaying major investment decisions in an environment of continued political uncertainty. These projects remain in our order book and will eventually be sold. The order books of non-ferrous and even glass have started to recover and are expected to support a stronger second half.
In line with our normal working capital cycle, working capital increased temporarily as we built raw material inventory ahead of the stronger second half order book. As a result, operating cash flow was softer in the first half, but still with a good cash conversion of 97%. Net debt increased slightly to 1.5 billion, with leverage remaining stable at 2.9 times.
Operational discipline remains the key driver of our financial performance. Network optimization, SG&A and cost reduction across our operations continue to deliver as planned. Together, these measures have more than offset weaker market conditions and very strong foreign exchange headwinds also. We continue to identify and implement additional operational efficiency improvement opportunities, optimize our raw material setup, and drive administrative efficiency to further strengthen our earnings power into 2027 and beyond. Sustainability continues to deliver benefits far beyond environmental performance. It improves raw material security, reduces costs, strengthens customer relationships, and supports our long-term competitiveness. Only profitable environmental measures are sustainable. We increased our recycling rate further to approximately 19%, continuing the strong progress we have made over the recent years. Our EcoVadis rating also improved again, placing RHI Magnesita among the top 5% of companies globally. A key milestone during the period was the start of our new recycling joint venture in India with Chemka Refractories. This partnership extends our successful circular business model into one of the world's fastest growing steel markets and further strengthens our local for local strategy.
Our priorities for the second half are clear. First, we will continue to deliver our self-help initiatives on pricing and cost reduction to support a stronger second half and full year adjusted EBITA of 400 million as guided. Second, we will strengthen cash generation through inventory reduction with the aim of reducing net debt to around 1.4 billion and leverage towards 2.6 times by year end.
Market conditions and our order book are on a positive trajectory in steel, while industrial projects are expected to recover as delayed projects get delivered. The demand for our longer-term 4 Pro contracts is exceeding our expectations. Pricing measures implemented during the first half are effective and delivering the required earnings stabilization over the remainder of the year. As geopolitical-induced volatility remains high, we are confident that our operational improvements and the self-help initiatives will continue to strengthen our performance. The first half of 2026 demonstrates that the actions we initiated in the last 2 to 3 years are delivering results. We have strengthened profitability, improved operational performance, and continued investing in the long-term capabilities of our business. As a result, our operational leverage has improved yet again. We are shaping our own performance through disciplined execution. I would like to sincerely thank all of our colleagues around the world for their commitment, for their professionalism, and for their dedication. These are stressful times, and we so much appreciate our colleagues' energy, enthusiasm, resilience, and contributions. Together, we continue building a stronger RHI Magnesita for our customers.